Good. So this is a reminder for my setup, starting from the indicators that I have now. I have this indicator UT bought a lot. So what I have in it is that I have this setup in it 1 and 7. So the 1 and 7 has really shown me the ATR period is 7, the key value. This changes the sensitivity of the blocks, of the signal. So I have by here on different time frames, I'll see different alerts, but it works very well. Look at it on 1 minute on my blocks. When it gave by here, it stood. When it gave another buy, look at. So I'll use it in connection with these moving averages too. I have 6 and 14. And the 6 is the one that I wait for the block to close inside of it. If signal is given, then I move from there. So we have this YouTube bought alert. Then it's stated like this in trading view. Then I have this moving average. If you have SMA 6 and SMA 20 setup, but I'm using 6 and 14. I changed this one to 14. Then after that, I have my MACD. This is my setup on my MACD. I have not changed anything there. Then after that, I have the Saint MACD 2. This one right here is what to look for, and this is the setup that I have for it. I've not changed anything over it. Then I have the OBV, and this is what it looks like. This left side of my trade helps me to hold my trade better instead of looking at these fluctuations and everything like this. So I usually put it on 3 minutes. So most especially in Asia session, that's when I use it the most. If you look at this 1 minute, you can see this signal right here, started in Asia session and it went all the way. And if you look at this, this is around 5,000 uh, ticks. So looking at 5,000 ticks right here, in between this place, having 5,000 ticks all the way, 5,000, 5,000, 5,000, and 5,000. To look at what we have now. So we're having like almost 20,000 approximately. Let me see, 20,000, uh, 20,000 ticks. So, which tells me that if I had held my trade from here up to here now, and a tick is 10, so that means we'll be looking at profit of uh 20,000 divided by, a point divided by 10, which gives us 2,000 points. So it's very profitable using this to hold a trade and entering trades on this side. So this keeps me in the trade. So when I look at this, I combine this with every other indicator. If I'm buying, I make sure my histogram is above zero and it's green. My MACD is green, and I make sure I have signal too over here to buy. We I am in uh oversold condition over here. The oversold condition, I have signal. Then with the signal, I was able to come in and went into my first trade, and that was the only trade that I took. So from here to here, and I got out of the trade. That was it. I saw this one happen. I saw this happen. I saw this happen. Then again, I take advantage of the demand setup that I see. As long as I'm buying, I take advantage of demand setup. Like I said, this was the only trade that I took and I stopped trading. I saw many opportunities, but I had to stop. So now, since the market got here, I waited around this place. As I was out, I was watching the market. And I noticed one thing. One of my best setup kept happening. And what I look for is breakout structure and demand when I'm buying, and breakout structure and supply when I'm selling. This was my prediction. All this never happened before I put this arrow right here. Now, so what did I see? I saw breakout structure here, and I saw a demand setup. So let me put it there. And demand setup would always leave behind a demand setup. And that is one thing that I've known since I've been trading this setup. So having this confluence, being in a psychological level and waiting for a retest to take this kind of a trade, what I do is I mark it. So this is demand zone. So since this demand is here, how do I determine my demand? I look at it by looking at the consecutive candles, three or more. So here I have one, two, three, even four. So that went out of the way. So away from it, let me take these indicators out so that we can have more clarification. So I expected the market to come back to tap into it. This was breakup structure. Market went up, market came back in this zone. Then I know for sure with this rejection, I would have taken this trade from here. After this rejection, I used this one as my stop loss. I would have taken it to this level, which is minimum of ratio 1 to 2. And if I maximize it, I'll be having ratio 1 to 3, being that we have this head right here. So that is there. Then after that, I looked to my left again. I saw another thing. A demand was left behind again. So here we have a red candle with one, two, three, four candles. We have breakout structure. We have a demand left behind on this psychological level. Then that gives me another setup to buy. So I could have taken this one right here again to buy. So here I could have taken this trade like this, and this top could have been my exit, and this could have been my stop loss because this trade belongs to this candle right here, and that would have given me another ratio 1 to 3. So what am I saying here? What I'm saying is this: when I'm trading this, as I'm using this to hold my trade, I'm using demand setup that I can find to take my trades. If the market is bearish, I use this same kind of setting in opposite way. That means I will have to be looking for supply, look for breakup structure in around my price action zones. So, like this, as it is now, we can see clearly this one will give us like minimum of, let me see here, around 8,624 ticks. That is what we are looking at right here. And that is not a joke. So, if we look at it, uh, that is 8,000 divided by 10 for gold. That's pure 800 points right there. So even if we decide to come out around this place, right here, that will be 6,949. So 6,949 too is not a joke. What gives me uh trouble is knowing when to stay and when to get out. But this record has always helped me to hold my trade. At this point, as a scalper, I wouldn't want the market to come back to this demand because I saw a clean demand setup right here. And the market is funny. The market may not take this demand right here. Market may come for the last demand that we have over here. So in my own opinion, when I see market behaving like this, I would get out. So this is another setup right here. So if market comes and touches this place, I'll be willing to buy because we have a very strong demand point around this place where the market has crossed. It was a resistance before, now it has become a very strong support. So now that's how I look at it. So I combine price action with these indicators at my key level. So that tells me what to do. So on my left, I use this to hold my trade. My right, I use it to enter my trade with confluences. And looking at everything together, I take my trade. So I take this back to what it was, my moving averages and my YouTube bought a lot. So if I come to 1 minute to have better entry, look at this is the way to go. After this candle right here, I would have taken this trade straight into profit, and I'll be looking at minimum of profit level of 7,696, which is going to be around the 700 points. So this is what it is, and I am keeping this. This is a very fresh signal for 1 minute. Look at that. For 2 minutes, we can see it's a fresh signal for buy. For 3 minutes, we having a push to the upside too, and this is getting green. There's this pullback, and as long as our moving average is above, we'll be buying. So it's a good setup for me, and the setup has really uh helped me a lot. I have it in a lot of places where I've used it, and it has really, really worked. So because of that, I'm reminding myself. I usually take this trade around 7 p.m. Eastern Standard Time (EST). So every day, and whatever the London session gives will continue from there. But it has always been smooth from uh, Asia session. So that is the end of this video, and I'll be using this for my reference every time, anytime, any day that I have to trade. So that is it for now. Happy viewing.